Hello again, Paul Rabelais here. As we're wrapping up 2018, moving into 2019, I wanted to give you an update on the 2019 gift and estate tax rules with some analysis on those rules. So let's jump right in. Two quick things. We'll start with the very basics. The annual exclusion amount for 2018, it was $15,000. For 2019, it'll be $15,000. It goes up by $1,000, but in increments of $1,000, but it's adjusted for inflation, so it goes up every few years. It stays at $15,000. The other number is the gift and estate tax exclusion amount. For 2018, it was $11.18 million. A lot of people called it $11.2 million. 2019 jumps up a little bit to $11.4 million. Now let's take a much closer look at those numbers and what they mean and how things are going to take effect moving forward. First, the annual exclusion amount of $15,000. And I say this every time I explain it because most people don't fully understand it. It's most people call a gift in excess of $15,000 a taxable gift. Ding, ding, ding. That makes people think somebody owes taxes. That's not the case. Let me give you an example. Let's say dad says, daughter, I want to help you buy that house you want. I'm going to give you $115,000. And so everybody's saying, wow, somebody's going to owe taxes because that's more than $15,000. Actually, nobody owes any taxes. Dad is required to report that gift on a special gift tax return with the IRS called Form 709. And yes, he will have made what technically is called a $100,000 taxable gift. That's how much the gift was, in excess of $15,000. No taxes due. What dad has done, he has used $100,000 of his $11.4 million estate tax exclusion amount. So now if dad dies after making that gift, he will only be able to shield $11.3 million from the 40% estate tax rather than $11.4 million. So that's the big discussion there. Also, if you're a married couple, each spouse can transfer $15,000 without any tax consequences or without any reporting requirements. So married couples can donate $30,000 to as many people as they want to every year. They can do it to children, grandchildren, unrelated people. It doesn't matter. Okay, so now let's take a look at the bigger gift and estate tax exclusion amount. So again, similar concept. Married couples, each spouse, each estate has this what will be an $11.4 million exemption. So that will allow married couples to exempt up to $22.8 million from the estate tax. We still have this portability provision, which makes it easier for married couples to exempt 2 times the estate tax, $22.8 million. More on portability later. But the concern moving forward after 2019 has to do with a couple of provisions that I'll call the sunset clause provision and clawback. So let's talk about those two. If Congress does nothing, and as I'm making this video, we are in a government shutdown, so I guess the prospect of Congress doing nothing is a possibility. Absent congressional action, this exclusion amount of $11.4 million will revert back to $5 million adjusted for inflation in 2026. So this is not the first time this has happened. Years ago, around 2010, the estate tax was scheduled to sunset, revert from $5 million to $1 million. It forced a lot of parents to give away $5 million at the last minute, thinking that opportunity to give away or leave $5 million would poof go away at the stroke of midnight. But just before the stroke of midnight, Congress said, just kidding, we're not going to let it go back to $1 million, we'll keep it at $5 million. A lot of probably frustrated parents thinking, wow, I had to give away $5 million, married couples saying we had to give away $10 million to our kids when we really didn't have to. Similar thing here, the estate tax law is going to, absent congressional action, sunset at the end of 2025, revert back to the $5 million exemption amount, adjusted upward for inflation, maybe about $6 million or so by that time. So that triggers some clawback discussion. So there is a concern about the temporary nature of the increased exclusion amount. Specifically, the sunset of the higher exclusion amount could deny taxpayers who die after 2025 the full benefit of the higher exclusion amount applied to previous gifts. So the IRS really in November of 2018 issued some proposed regulations. They gave an example. Let me tell you how that example is applied. Let's say a person prior to 2026, we have this $11.4 million exemption. Prior to 2026, they make a $9 million gift. No tax, they have to report it, and they used a significant amount of their exemption, but no gift tax is due. Then 2026, sunset kicks in. Now we have a $5 million exclusion amount that will be a little bit more than that because it'll be adjusted for inflation. So, and then the person dies after 2026 or during or after 2026. How do you calculate the tax? Well, the IRS in its proposed regulations has said that the exclusion amount or the credit amount against estate tax under those circumstances will be based on the higher $9 million amount rather than the lesser amount that may be in effect in 2025. So if they die in 2027, they don't get 11.4 million exemption, but they'll get the 9 million, which is how much of it they used, and they won't be bound by the lesser exclusion amount that may be in effect when they die in 2026 or beyond. So that just came out, and that's new. All right, so bottom line is annual exclusion amount $15,000 didn't change. The gift and estate tax exclusion amount went up from 11.18 to $11.4 million. We still have portability. Portability has been around for a few years, and what it does is, let me give you an example. Let's say there's husband and wife, and husband dies, and he only has, and I say only has a $6 million estate, exemptions 11.4. So he was only able to use $6 million of his $11.4 million exemption. $5.4 million of his exemption went unused. Well, if his estate files a timely estate tax return and makes the necessary portability election, that unused $5.4 million exclusion amount gets to be added on top of the surviving wife's already existing exclusion amount to give her a much larger exclusion amount, in theory allowing the married couple to fully utilize 2 times the estate and gift tax exclusion amount. So we still have portability. We still have step up in basis, and a lot of parents like that and children like it because many parents have held on to assets, real estate, investments, stock, and there is a significant amount of appreciation in that asset. So much so that if the asset was sold while the parent was alive, there'd be a significant amount of capital gains tax. The step up in basis allows for that asset to get a new basis for capital gains tax purposes. So when the parent dies, all that previous appreciation goes untaxed and a new capital gains basis is set, the value of the asset on the date that the parent passes away. So that step up in basis for those of us who live in community property states like I do in Louisiana, that step up in basis rule also says that if a couple has community property and the first spouse dies, all of the community property that the couple owns gets a step up in basis, not just the deceased spouse's half. So there's a really benefit there, and really that kind of forces or encourages folks who have appreciated assets. It really encourages them to hold on to those assets, let them get a step up in basis at death rather than selling that asset, incurring all of that capital gains tax. So still have all that step up in basis stuff. And just know that we have such a large gift and estate tax exclusion amount, $11.4 million, $22.8 million for married couples, doesn't affect very many people. Affects some, but not very many. But we still have the gift tax reporting requirement. So when gifts are made in excess of $15,000, the donor is responsible for filing the United States gift and estate tax return with the IRS. It's called Form 709. So that reporting requirement is still available, even though we have such a large estate tax amount. Okay, so what I'd like you to do is make sure you subscribe to the YouTube channel that I have, so we can keep updating you, and perhaps you'll get notified of other updates that are important that we provide. You can like the video, give it the thumbs up if you like it, and then comment below with any maybe additions or comments that you feel like you can contribute to those who are taking a look at this content and want to really understand things and keep things in their family. They've worked hard for it. They want to preserve it for their loved ones. I'm Paul Reveley. Y'all have a great 2019 and beyond. We'll see you next time.